This is our Forex blog for September 2nd, 2014. Before I show our currency indexes and currency meter, I'd like to show how our signals did today. Here's the euro dollar. And the key to trading is small losses, big wins. This was yesterday. Small risk. It generated a bigger profit than what the risk was. Obviously, the previous day it had a big win, small loss, win, win, small loss at the end of the day. Today had a small risk, bigger win than what the risk was, and I took a trade right here, and notice the price started to move our way, so we moved the stop down, and we lost less than half of what the initial risk is. So that's the two benefits of trading. Your wins can be significantly bigger than your losses. Your losses can be less than what your original risk is, and you can also be more than 50% winning. Here's the pound dollar, which did tremendous today. Here's a narrow range breakout near the lows. Small risk, bigger win, slightly bigger win. We buy the lows here, which did not generate that much. A lot of times counter trend trades either lose, make a small amount, or sometimes you pick the absolute bottom and it explodes up. Here's a little two-wave up move, which is one of my favorite trades when I'm manually trading. And you can see it had 4 or 5 times bigger win than what the risk is. And then you get short right here, and unfortunately gets stopped out because it's statistically too low, and the stop it's just tightens and it got stopped out. But you can see win, which covers that loss, huge win, and small win. And another currency that I spent a lot of time today improving the signals and adding some new ones is the dollar CAD. Previously today, when the market makes an explosive move up and it doesn't have much of a pullback, we miss these trades. But I put in a new trade that measures the time and the distance from this swing to this swing. There's no pullback, so this doesn't actually count as a swing high, but it's the highest high from the last swing low. It's over 20 pips over the last one, and a couple hours goes by and it's in a narrow range and it breaks out, and you can see this is your risk and a reward, slightly bigger win than loss. And then you have a trade here with a small loss, and then it buys this pullback and it has a 2 or 3 times bigger win than loss. And again, the key to trading is small losses, big wins. That's it. There's nothing more to it. That being said, one of the easier ways of trading is to use our currency indexes, and you can see what all the euro dollar pairs are doing, the dollar pairs. The dollar's going up and the euro dollar is going up. The pound, is kind of slowly going up. It's not able to get above its previous day's high and then breaks down underneath the hourly. So the euro pound, the euro being strong and the pound being weak, is a good one to be looking for buys. So here's a 5-minute chart, and when you're manually trading, you're basically looking for pullback trades, once you see a breakout, or I always like the the two-wave pullback, because that gets rid of all the sellers. If it doesn't pull back that much, this breakout right here is very high probability. You have very small risk, very huge reward. And let me just showcase how the actual euro pound signals did. When the euro is strong and the pound's weak, more than likely this found some big trades today. And you can see that also the yen was weak today, the dollar was strong, the euro was weak. Here is the euro JPY, strong euro, weak yen. You're looking to buy pullbacks, especially when the euro got stronger. But here's the the high of the day and it breaks out. If you want to buy a breakout, it's much higher probability when you do this, and you can always draw your fibs off the last wave and get an idea of where your fib targets are. And in this case, it went slightly above the second fib target, but most of the time these breakouts are going to go to the first fib target. So you have if the trade works, you already have a 1 to 1.5 times, and sometimes 2 times bigger profit than what your risk is. And what's nice about this breaks out, comes back down, tests the highs, can't break back above it. So at that point, you would move your stop up, and your risk at that point is just absolutely minimal, and it made 4 times more profit than what the ultimate, tightened stop was. Currency indexes just make trading easy and a joy. You can see here the pound just absolutely falling. Let's look at some of the other currencies. The Swiss is strong, so we have a weak pound, strong Swiss, so the pound Swiss is going to fall. And all you got to do is look for pullbacks or sideways rectangle patterns. So it breaks down, you go short right here, your stop's about here, it kind of goes down a little bit, comes back up. As soon as it starts going back down, you move your stop near break even, and it goes down. You have a little double bottom right here, and there's multiple hours go by, and it can't break above here. You go short right here with your stop, above the high here, and you're never going to catch every pip, but even if you get out of this trade right when it breaks kind of this trend line right here, your win versus loss is 2.5 times more. And of course, this is a trend that's just super weak, so you have a narrow range rectangle pattern right here where the risk is above the high, and it just kind of goes down, and you move your stop down, it goes down, you move your stop down, it goes down. Usually you're going to get out of this trade somewhere between the first 1.32 and 1.618 fib target. So it breaks the first fib target, you might want to exit half your trade, and then comes down and stops at the second fib target of this whole first big move down. So ultimately, if you got out half here and half down here, this would be your profit, and this would be where you got short. You made about 6 to 8 times more profit than what your risk is. And 10 to 20% of your trades probably, or of your winning trades, should be big wins like this, and the rest are going to be small, medium-sized wins. That's it.